There was all these headlines about these 14 cities at first. Now the newest data is saying 13 cities that have a higher drop in housing prices. There's a trend happening is what the data claims. I've got an article here from NASDAQ.com that talks about, and I'm going to say them in reverse number order: 14, Minneapolis, Minnesota; 13, Baltimore, Maryland. Shout out to Lee. 12, Virginia Beach. Shout out to Matt. 11, Kansas City. Shout out to Patrick Mahomes, who just lost last night. 10, Richmond, Virginia. 9, Oklahoma City. 8, Columbus, Ohio, where the early bird resides. 7, Birmingham, Alabama. 6, Cincinnati, Ohio, who doesn't have a quarterback right now. 5, St. Louis, Missouri. 4, Louisville, Kentucky. 3, San Antonio, Texas, the Alamo. 2, Indianapolis, Indiana. And 1, Memphis, Tennessee, where they claim that there are house prices dropping. The first thing I think of when I look at this list, GC, is that a lot of these cities are the cities that are real estate, rental property investor kind of cities, right? Like I recognize Memphis, I recognize Indianapolis, I know Oklahoma City, Columbus, we've got people there, Birmingham, stuff like that. Is this something to be concerned about, GC?
Well, I think, how I love Jacksonville, Florida, and those other cities compete for investors who choose to put their monies in different markets in which to invest. And this would be an easy time for me to jump on with the headlines and say, oh, geez, there are problems in these other markets. But guess what? This is a non-story. This is a sign of, reading the headline. I think this is a sign of the media running with any chance they get to talk about a potential market crash coming. So we have been talking about that for a while, and we have been around for long enough together in this community to see that these warnings that the media has given have not come true and that home prices have not fallen. But you can see that anything that talks about potentially home prices going down gets clicks and gets eyeballs. And there's a penchant for these types of stories. But what you actually have to do is read the reports, and not just read one report, but actually read multiple reports. And if you actually read multiple reports, you see a couple of different things. Number one, actually just reading the first report, what you find out are, you see the information at the top of the report, kind of the most important parts of the report, and this percentage share of price reduction is nowhere to be found. In the beginning of the report, they're talking about things like inventory, the number of unsold homes, the number of new listings. They're talking about prices. They're talking about days on market. They're not talking about this percentage share of price reductions. It's actually all the way down at the bottom. It's a part of every single report that Realtor.com has put out. And they always talk about this percentage share of price reductions. But when you look at the things that they actually think are important, here's what they have to say. So inventory this month versus last month, and inventory year over year down. When inventory is down, that means that there is a higher floor for prices. The number of unsold homes down year over year. That's unsold homes. So that means that there's less unsold homes on the market. That's a good thing for pricing. The number of new listings coming on the market down. So this means less homes are coming onto the market, which keeps inventory levels low, which helps to keep a high floor for pricing. They talk about how median prices are stable year over year. And then they talk about days on market, which is down. And not only down, let's see, it was down, I believe, one day down from last year. But they also compared it to the pre-COVID levels. And the days on market, and this is across the entire country here now, what we're talking about, days on market is actually 2 weeks shorter than what it was from 2017 to 2019. So everything that I just talked about there indicates a very strong housing market, a stable housing market, even the fact that prices are stable. But what does this headline come out? What is the article written about? It's the percentage of price reductions in these 14 cities. So even though it'd be easy for me to jump on the bandwagon and say, oh, stay away from these other cities. No, that's not the truth here. That's not the real story. This is another example of media grabbing headlines, data without perspective, all the things that we talk about here.
All the things we try to shine a light on, right? I would say short of like fighting against, because we're not really fighting the media. We are just fighting the lack of perspective out here. To your point, GC, I want to highlight a couple of things. One is the headline is cities slashing prices, right? And it's not that the average price has gone down in these cities. It's that the average number of homes that were listed at a certain price and then came a little bit further down on that price has gone up in these 14 cities, right? So very different than what you think it is, which is why you're saying this might just be an alarmist headline to get you to read the paper. The other thing that I want to say is that's a great breakdown of all the different data points, GC. And what I'm hearing from you is a bunch of data points that essentially say supply is down. And if we know supply demand dynamics, and there's nothing there that says that demand is down in any way, it's just saying supply is down. So if you decrease the number of the supply in an economy and keep the demand constant, then prices go up, right? So I could see why you are saying these things of like putting these things out and saying prices are staying stable and or going up. This is nothing to be worried about, especially since the headline isn't actually saying the price is going down. It's just saying that the percentage of listing is going down.
That's exactly right. And we've been talking about this for over a year. When we said that prices were not going to drop, we were probably the only outlet that I even listened to that said that prices were not going to drop. And it was because we saw that supply or inventory levels were extremely low. And we know that it takes years for builders to build enough to solve the supply problem. When I call it a supply problem, that's actually a good thing for you as an owner of investment properties. It's a supply problem overall because that means that home prices are actually set to go up. And, even though interest rates have gone up so high because of the Federal Reserve's actions and that they almost got to 8%, you still are seeing that prices have remained stable. Well, the reason is when interest rates go that high, it does decrease demand. It does decrease demand because less people can buy homes. But because supply is so low, which is exactly what the headlines of this real report are, that's what keeps this floor for this asset. The floor of pricing for this asset is very high. And in a nutshell, that's why prices haven't gone down. And that's why, we're expecting them to not go down in the future, again, because of the supply problem.
Got it, GC. So basically, in order to put a cap on this first article, this headline of 14 cities slashing prices, even though these are all cities that it would behoove you to put down, because at the end of the day, Jacksonville is not on that list. And these are all cities that compete for rental property investor dollars with your company. The takeaway here is, even if you're in that city, you got to look further in the data. You got to get some real perspective. This isn't that prices are going down. This is that there's been in one report, there is a stat that always gets reported of percentage of decreased from listing prices going down. But at the end of the day, what the rest of the report says is supply is down, prices are stable, and this is not those markets going into some kind of housing recession.
Yeah, exactly. As if I'm putting my investor hat on, this headline that I saw about the percentage share of price reductions going up a tick of a point in some of these cities does not even it's not even on my radar of where I would decide to put my money. Now, I would choose those different markets based on other things like population growth, like the ability for all 5 profit centers to benefit you, like the vertically integrated team to support you. And that's why I would lead you to invest in Jacksonville, maybe other than some of these other cities, but not because of this report or this, headline that, 14 cities are slashing prices. When you actually read the report, again, it's either further proof that the people that are writing the headlines are not actually writing the articles or maybe not reading the reports, because in the report, it says price reductions were still below last year's level in all 4 regions of the United States. Last year was a pretty good year for real estate. In Jacksonville, home prices went up about 10%. So, and that's really that perspective piece that this headline is lacking. And the bigger thing is now the fact that there has been a percentage increase in the number of price reductions in a market, it is one of 1,000 different metrics to take a look at, right? Not all metrics are always going to say this is the perfect time to buy. Not all metrics are going to say this is the perfect time to sell. What you look for are the general trends and, how most of the metrics are looking. The reason that the people would look at the percentage of price reductions going up in a local market is that could lead to a softness in that market. So by itself in a vacuum, that makes sense to look at that and have it be one of 1,000 metrics that you look at, but certainly don't make a buying decision off of it. And what you also should be asking yourself is, why is that happening in some of these markets, but not in others? And so what I did is I did a bunch of digging in this report, and I also looked at past reports, and you can see a strong correlation between, and it really just kind of supports the point that we were just talking about, Pablo. You see a strong correlation between the percentage of price reductions increase and inventory going up in these different markets. Like, for example, Pablo, you mentioned Memphis. Memphis was number 1 on the list of percentage of price reductions in September. It was number 3 on the list of percentage of price reductions in October. Guys, the percentage here going up is not astronomical. It's like a 3% increase as well. So just take that into perspective. But if you start to look at why did this happen in Memphis, why are you starting to see a higher percentage of price reductions in Memphis? You start to look at the inventory thing. So inventory in Memphis increased 30% from last year to this year. So if the reason why pricing is so stable across the entire country, and especially in Jacksonville, Florida, is because we have severe lacking of supply. Well, in Memphis, and I'm not an expert in the Memphis market, but there has been some traction there as far as bringing new inventory to market. So they've seen a 30% increase in the amount of inventory on the market. There's a correlation between that and then the percentage of price reductions. It all comes back to supply and demand. And actually, if you go through the rest of those cities on the list, almost without exception, there's that correlation. If they had a higher percentage of price reductions, they also had a significant inventory percentage increase as well.
There you go.